Good morning, all. Welcome to the SBI Securities Daily Market Dose, where we will be discussing the trends in global markets, key Nifty as well as Bank Nifty levels for the day, along with the inputs on the derivative data. Now, before that, let us take this opportunity to congratulate everyone on the successful landing of Chandrayaan 3 on the surface of the moon. Now, it's indeed a big moment for all of us, for our entire nation, and we would like to congratulate ISRO and all the scientists who have really worked hard for this. Coming to the markets, global markets are trading on a positive note, and Gift Nifty is also showing positive momentum with gains of around 60-65 points currently. Now, yesterday's move was led by Bank Nifty, and with that, Nifty also took support at 19,360, 19,365, and it immediately started moving up and witnessed an upside momentum up to 19,470 zone before mildly closing in the green. Now, if we look at the candlestick pattern, yesterday's candlestick was a bullish engulfing one, and remember this bullish engulfing candlestick pattern has formed after a tight range trading day on Tuesday, which was just 60 points. So this shows that there is some expansion of momentum on the upside. Now, there's one interesting catch here is that while index is expected to open around 19,500 zone, that is where the highest call writer is placed. So for the first 30 minutes, we feel 19,510, 19,530 zone would be very crucial. If indices manage to take out this 19,530 zone, then it would mean sharp short covering move up to 19,580 and 19,600. Else, indices could continue once again trading in this range between 19,400, 430 on the downside and 19,530 on the upside. For the day, we feel that index can take support at this 19,430, 440 zone, followed by 19,360. On the upside, first resistance, as we discussed, could be witnessed around 19,530, 19,540, followed by 19,610. If we closely look at the derivative data, now yesterday strong put writing was witnessed in 19,400 and 19,350 strikes, while call writing was visible in 19,500 and 19,600 strikes. Now, before yesterday, the highest call writer was placed at 19,400 strike, but yesterday's move forced that call writer to shift positions to 19,500 and 19,600, which implies that the overall trading range for the today's expiry could be between 19,380, 19,400 on the downside and 19,600 on the upside. For the Bank Nifty, now this index displayed the much awaited outperformance led by strong moves in Axis Bank and ICICI Bank, while there was slight bit of support from Kotak and HDFC Bank also. Even mid-caps like CSB, Federal Bank, IDFC Bank were in action, while PSU banks and financial services stocks also showed extreme outperformance. So we feel that the momentum that Bank Nifty and the financial services stocks have displayed yesterday could also continue today, and this is kind of a broad-based reversal move, and this reversal move is just not backed by a move in one or two stocks. So this what we feel, talking about the levels now, 44,150, 44,200, which was the resistance earlier, could now act as a strong support, and this current rebound move could continue up to 44,700, where the 50 DMA is placed. Data wise, if we see, significant put writing is visible in 44,000 and 44,200 strikes, while the call writers are placed at 44,500 and 44,600 strikes for today's expiry. This implies a trading range of 44,200 on the downside to 44,700, 750 on the upside. Also, important thing to note is that the indices Bank Nifty index yesterday has managed to cross and close above the highs of the previous 6 sessions, which is an important fact. Let us also see now what the big boys are doing, what the FIIs have done yesterday, and that's very important to gauge the market trend. So FIIs yesterday have been if you look at the open interest data of the market participants, FII's long short ratio for index futures has seen an improvement now, with the current reading at 45% as against 39% of the previous week. So there has been a remarkable improvement in the index futures positioning of FII towards the long side. So we feel that the FIIs are steadily covering their short positions in index futures. Apart from being a buyers in index futures, they have also aggressively gone short in index puts, which is a bullish sign, while they have also sold small quantity of index calls, but the quantity of index calls that they have sold is quite less compared to the index puts that they have sold. So that means the overall positioning, the overall stance of the FIIs is now turning from from being bearish to becoming a bit neutral, and crossing 19600, I feel this data would be more bullish going ahead. So currently from the bearish stance, they are now coming to the neutral stance, and that is in itself a big positive. While there was outperformance in Bank Nifty yesterday, the mid cap and small cap space also was buzzing with outperformers and has hit another all-time high. Hence, we feel that along with the indices, traders and investors should have a stock-specific approach, as a lot of interesting opportunities are coming in these diversified sectors like PSU, banks, all the other PSU stocks, the defense names, power, mid-cap IT and railways. Now all these spaces could continue to outperform from here on also. Coming to the currency front, now USD INR futures yesterday appreciated, and it witnessed its biggest single day gain in the last 2 months. This was on the back of the ease in crude prices in the international market, and moreover, if we see the USD INR pair, uh, what we've seen is that from the highs of 83.20, 83.30, now it has come back to 82, 85, 82.90, and it is approaching its prior breakout zone, which is around 82.70. This is also the 20-day SMA. So we feel that this zone would be very crucial, 82.70. If the indices manages to hold 82.70, once again there could be some pullback up to 83.20 kind of levels. And also tracking the USD INR, it's also important that we simultaneously track the dollar index also. So if we see some kind of strength in the dollar index continuing from here on beyond 104 half, this would mean that the USD INR also could once again resume its journey beyond 83 levels, 83.20 on the upside. So dollar index from here on would be a key while we track USD INR levels. So thank you all for listening to this podcast. Have a great trading day ahead.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.